Hello and welcome to this preview of the Banker's Top 1000 World Bank ranking for 2016. Key changes this year are that while Chinese banks continue to dominate, they are showing signs of slowing down. Banking sectors from other major emerging markets have tumbled due to falls in their currencies and in commodity prices, causing problems in their domestic economies. US banks are holding their own, with profits up 12%, but UK and German banks both saw sharp falls in profits, and much of Europe is still struggling. The interesting thing going ahead is what will be the impact of the UK's vote to leave the European Union on both UK and other European banks. In the main, it can only be negative. So let's start with China. As this chart of the top 10 banks by Tier 1 capital shows, the big four state-owned Chinese banks have a stranglehold on the ranking, with Industrial and Commercial Bank of China, ICBC, remaining number one for the fourth year in a row. With Agricultural Bank of China moving up to fifth place and pushing Bank of America into the sixth slot, Chinese banks now hold 4 out of the 5 top places. They've increased their capital by between 7% and 11%, but their assets only grew between 2% and 5%. So this suggests that Chinese banks are becoming rather more cautious as the Chinese economy slows down, and they're holding more capital against their loans. Chinese banks' profits are down 3.5%. That's the first drop seen since 2004, and non-performing loans, while still low, are beginning to tick upwards. But the slowdown in China is slight compared with the rout we've seen in other major emerging markets such as Brazil, India and Russia. Russia's Sberbank dropped 12 places from 43 to 51, and Brazil's Itaú fell 16 places from 41 to 57. Indian bank profits as a whole fell 65%, and a number of Indian banks went into losses. In terms of total profits, China still leads the world with $308 billion, roughly one-third of the total, and $100 billion more than those of US banks in second place. But whereas US banks' profits are growing, Chinese ones are falling. Japan is in third place with $57 billion, less than a fifth of Chinese profits and only slightly more than a quarter of US profits. Among European countries, France is the leader and in fourth place globally with $41 billion in profits, 30% higher than last year. After France follows Canada, Australia, the UK, Spain, the Netherlands and Sweden. But mostly Europe is a story of continuing difficulties. 3 of the least most profitable countries, Greece, Cyprus and Portugal, are Eurozone countries still making losses. They're joined in the bottom 5 by Azerbaijan and Ukraine. Major European countries such as the UK and Germany also have banking sectors under pressure. UK profits fell 22% and German profits by 63%. That's the 5th largest drop globally in percentage terms and less than only those of Azerbaijan, Kazakhstan, India and Brazil. In the UK, losses at Royal Bank of Scotland and Standard Chartered and profit falls at Barclays and Lloyds pulled down UK profits. In Germany, Deutsche Bank fell into a loss and an 18% decrease in its Tier 1 capital, the largest amongst the top 25 banks, sent the bank tumbling from 16th to 21st in the global ranking. Following the Brexit vote, the nascent Eurozone recovery is again in doubt and is likely to impact on next year's European banking results. A comparison of profit shares over the 10 years past from 2006 until now shows how the world of banking has changed since the financial crisis. Back in 2006, Europe's banks contributed 42% of global banking profits. Now they only contribute 16%. By contrast, China's share has gone from 4% to 32%. The US share has remained more constant at 27% in 2006, 21% now. And this reflects how US banks recovered faster than European banks after the financial crisis. It's been a difficult year for many emerging markets, but despite problems with currency falls against the dollar and drops in commodity prices, the best returns on capital are still to be found in emerging markets. Average return on capital in Africa is a handsome 28%, the kind of level we haven't seen at most global banks since before the financial crisis. South America scores 22%, while Asia's figure is 16% and the Middle East 14%. This compares with just under 8% in Western Europe, higher only than Central and Eastern Europe's 5%, where banking sectors ran into both economic and political troubles. TheBanker's Top 1000 World Banks contains a wealth of information with breakdowns by country and by region, by return on capital, by loan to deposit, by non-performing loans and cost-to-income ratios, among many other measures. The ranking will appear in the July issue, along with commentary from the Banker's team of editors on what the rankings mean in terms of banking trends. Anyone wishing to order a copy of the July issue can do so at top1000worldbanks.com. The Top 1000 ranking is taken from the Banker database, which contains a wider range of data on many more banks than appear in the published ranking. Anyone wishing to subscribe to the full database can do so at thebankerdatabase.com. And for those who would like to see what the database can provide, we're offering a free trial. Further details can be found at the end of this video.